In our previous lesson, we discussed the overview of the accounting equation and the double entry system. That is, we discussed the various subtopics that we'll study under the accounting equation and the double entry system. In this lesson, we will study the accounting equation. Our objective for this lesson is that by the end of this lesson, you'll be able to derive the accounting equation. The totality of financial accounting depends on the simple equation called the accounting equation, or sometimes also called the balance sheet equation. Let us now look at the accounting equation. Listowel introduces cash of 1,000 cedis and building of 25,000 cedis. As a result of this, if Listowel introduces cash of 1,000 cedis and building of 25,000 cedis for the commencement of a business, as a result of this, the business entity becomes an owner of economic resources of 26,000 cedis. That is the cash, the addition of the cash and the bank. In the same way, the owner also has a claim of 26,000 cedis on these resources. So if that is the case, then the resources that are in the business is equal to resources supplied by the owner. So, Listowel supplied a cash of 1,000 cedis and a building of 25 cedis. As a result of that, the business entity is now an owner of economic resources of 25,000 cedis and 1,000 cedis, giving us 26,000 cedis. The cash and the building are the actual resources in the business. And these resources were supplied by the owner. So, the resources that are in the business is equal to the resources supplied by the owner. The resources that are in the business are what we call assets. And the resources supplied by the owner is what we call capital. So it means that asset is equal to capital. This is the accounting equation. If the owner is the only person who provided all the resources. Now, as a result, let's look at, as a result of Listowel borrowing 4,000 cedis from the bank as a loan, as his next transaction. He borrowed 4,000 cedis from the bank as a loan. Now, let us now look at the impact of this transaction. Now, so this one is equal to the capital. So now that Listowel borrowed 4,000 cedis from the bank as a loan, this transaction will affect the accounting equation. The cash in the business will increase by 4,000. So cash will increase by 4,000 cedis. and a new claim against the resources will arise. And that is the claim by the third parties against the assets of the organization. So in that case, and the new claim will also be what? 4,000. And the new claim by third parties against the assets of the organization is what we call liabilities. So in this case, now the accounting equation will become assets will now be equals to capital plus liabilities. So now the assets is now going to be the building, which is 25,000, and the cash. And now the balance of the cash will be 1,000 plus 4,000, and that will give us 5,000. Will now be equals to the capital the owner brought, which is the cash and the building, 26,000, plus the liabilities, the loan he took from the bank, 4,000. So 25,000 plus 5,000 will give you us 30,000. 26,000 plus 4,000 will also give us 30,000. So when the resources are being provided by the owner and third parties, the accounting equation becomes assets equals capital plus liability. So the assets are the resources, and the capital and the liabilities are the means of financing the resources. So capital is a method of financing the resources that does not require repayment but represents ownership in the business. Liabilities, a method of financing the resources, that is the asset, that requires repayment. If all the resources in the organization are also provided by third parties, in that case, the accounting equation becomes assets is equal to liabilities. In that case, the owner did not provide anything. Everything in the organization was provided by third parties. So the accounting equation, therefore, is an algebraic equation that expresses the relationship between assets, capital, and liabilities. And it says that asset is equal to capital plus liabilities. In this lesson, we studied about the accounting equation. And we said the accounting equation is an algebraic equation that shows the relationship between asset, capital, and liabilities. And we said if all the resources in the organization are provided by the owner, then the accounting equation will be asset is equal to capital. And if the resources in the organization are provided by both the owner and third parties, then the accounting equation will become asset is equal to capital plus liabilities. And if all the resources in the business are provided by third parties, then the accounting equation becomes asset is equal to liabilities. In our next lesson, we will continue with our study of the accounting equation. Let me see you in the next